Hey traders, John Howell here. Today, what I want to share with you today is I really want to dive into a pattern that I see that forms again and again and again in the market, and it's actually a bit of a warning signal not to enter a position or not to get into a trade at this time, because it's a very high probability that we're actually about to reverse against that position. So this is actually just a pattern that I really want you to focus on as you're trading. If you're looking to get into a trade, this is actually a bit of a warning signal that momentum is actually slowing down in the markets that you're about to enter, and it's probably going to go against you. So let's get straight into it, guys. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into today's educational training for you. One thing I've seen over my last, I've been trading the markets for 20 years now. And one of the things that was really big for me when trading the markets was that there was many times when I'd get in, when I would hear the phrase the trend is your friend, right? The trend is your friend. Now that is true, but sometimes you can have an upward trend, but you can have the trend slowing down, and therefore because the trend is actually slowing down, it's actually not a good time to be entering a position at that time, because we could be getting at least a bit of a reversal against that. And if I use the bullish case example here, if the trend has been going up for a while, then what I've noticed certain patterns form in the market to show that the trend is actually not strong. The trend is actually slowing down. And because they're slowing down, I'll call this like momentum, right? So there's momentum, which is strong trend, there's strong momentum in the markets. And one thing I've found is that there are periods of time when the market actually starts to slow down. So let me just share this with you here. So if I bring up my handy dandy, I'm just bringing up the charts right now. If I show you this here, and it doesn't matter what market it is, you'll start to see this here, right? So one thing that I've learned from one of my earliest mentors was the form of strength in moves, right? Or like the strength of a move, or strength of a leg in the markets. So if I just draw this here, let me just zoom this chart up for here, because I'm not really focused on the actual chart. It's more about the education today, about teaching you this is the warning sign of not to be getting into the trade when you start to see this, because it's probably going to go against you. So when looking at the markets, right, when looking at the actual the market itself, one thing that I've noticed is this. Okay, so if we have a leg to the upside, let's say for example we have different legs to the upside, right? So we have the upside in an uptrend. So we have a leg that goes like that. Okay, we have a leg that goes like that, and then we have a leg that goes like that. Okay, so that's more like a leg. Now a leg simply means is like it actually had a really strong move to the upside. So if I'm using this, an arrow, you'd actually get some green candles coming through there like that, right? Or some green candles that are looking something like this. And then the green candles would look something like this here, right? So if you had to call this here, if you had to look at these here, which one is actually stronger in the markets? Is it A? Is it B? Or is it C? Which one is more like really strong momentum? There's a lot of strength behind that move. It'd be A, right? So A would say, okay, there's really strong buyers here at this time, right? Bam, bam, bam. There's really strong buyers. Well, if A is the strong buyers and what I call a strong momentum, then check this out. If that's strong buyers to the upside, then what is C? C is actually quite weak, right? It's like it's going up, but notice how it's actually slowly going up. It's like the buyers are trying, they're trying to move it to the upside. Now, this is where it gets really cool about what I just walked you through. You've got the strong buying leg, cool. But then there's times when the market actually is, where the buyers are actually quite weak. Now, this is a case, if you're looking to buy the market or looking to get into a long position in the markets, then this is for you, right? This is going to really help you, staying away from long positions at this time, because we're likely to get a reversal. Now, of course, guys, everything's a probability, right? So you're probably going to get maybe 10, maybe 20% of the time that it does keep moving in that direction. But more times than not, I've found a good 70-80% of the time that when you get this pattern I'm about to share with you, it actually reverses to the downside. So when you start to combine A and C together, meaning you have this is A leg, but then suddenly we start to go into a C leg. Now I'm not using, this is not ABCs and Elliott waves and so on and so forth. This is more like identifying where is the strength right now, right? Because what we want to do is we want to be getting in when the market's strong, right? The last thing we want to do is getting into the market where the market is actually slowing down, right? Momentum and strength is slowing down. Because guess what's going to happen? We go from strong through here, and then if the overall market's doing that, now how that would look in the markets is this, right? We'd actually start to look at these would be the bars. You know what I'm saying? So that'd be the bars through there. That's what the bars would look like. Notice how the overall move is, it's not like a rocket ship, right? Like here, bam, 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 bam. Whenever you get this here, there's a high probability we're actually about to start to see at least a bit of a short-term drop, not a big drop. So it's very, very, very dangerous trying to go short here. But what this is all about it's all about helping you, stopping you from getting into positions that you think, oh, this market's going up, I'm going to jump in now. Because when you start to see this here, the market is actually saying, hey, the buyers are slowing down, so we could be getting ready for a drop. You don't want to go short here. The reason why is because you just don't know how big the drop's going to be. Is it going to be down to the low here? Or is it just going to be, or are we just going to get something like this when the market goes down here, down? We only might get a short-term drop and then just go sideways like that. The whole purpose is that if you start to get this move here, especially if you get some sort of a strong breakout. So let's use it here. Especially if you get some sort of a strong breakout here, there's a high probability that this bar here is going to completely reverse against you, right? Because this bar is what? This bar is coming off the back of what? It's actually a weak overall upward move, right? So let me show you some examples here of what I'm talking about here in the markets. This is for the bullish side, but it also works for the bearish side. And I started noticing this probably about 10 plus years ago. I would notice this happen for the bullish side where the market would actually go up, and I'll change the color. Actually, let's just make this a lot more thicker. Let's just change the color back to black, right? So I go up and I notice that through there, and then it'll reverse. Even for the downside, right? The downside will go down, but then it'd start to go, it'd still go down, but I noticed this would actually go up through here. That will go up, and then that will go down. Let me show you some examples here of what I'm saying here. I'm just thinking on the top of my head of some examples of what I'm seeing through here. So again, guys, this is more for short-term trading. So as a trading basis, not an investor's more like buy and hold for many years, right? But when you're looking for trading opportunities to get in now, hold for a couple of days, maybe for a couple of weeks, I'm trying to share with you here, right? So if I go back to this level, notice this point through here. What actually happened? We got what? We had this very strong up leg, but then notice what happened here. So if I had to do a line through there, the line would look like this, right? The line would be strong up. And then notice this overall movement to the upside. Even though it was going up, notice the angle of the overall move is what? It went from strong up to started to go slow up, right? It's strong up. Remember, that's the A and that's the C, right? This is the A leg. Notice how this is more like C, right? It's going up, but it's going slow. So when you start to combine these two together, you start to really get you go from strong to slowing down to then that there. And as you can see, look what happened here. We reversed down here. So if you're trying to look for a long signal here, then it would have been what? Would have been very, very risky because we end up getting actually a bit of a short-term down leg through here off that. Now, that's not always the case. What can happen a lot of the times is that we may go up, we'll go through here, we'll just get a bit of a short-term pullback, and then it'll continue the upward trend, right? So what was, again, this is more about short-term trading opportunities, how to identify good opportunities. And again, we want to be getting in when the market is actually picking up strength, not when the market is actually slowing down. Makes sense? So this is more like a slowing down pattern. And you can see it even through here on a smaller scale, meaning we actually had this strong up leg through here, but not, see the angle through there? See how it was up and then it just started to slow down, right? And so you start to notice these types of patterns in the markets. And this also happened on soybeans. If I go SIYB, right? If I show you this here on soybeans, right? And again, this is just a pattern that forms again and again and again. Look at this here, right? Really, really, really look at this. Look, see how strong. Look at that. Look how strong that is. Bam, bam, bam. But what is this? Look at this. See that through there? So we went from strong to then the market started, after this big leg up, we started to slowly go up, right? So this is actually a time here where, for me personally, whenever I see this, I'm actually not looking to go long. I'm not looking to go short. I'm just saying I'm looking to stand aside, right? The reason why, because remember, one of the biggest things about trading, right, is just trying to stop yourself from getting into trades that's probably going to be a losing position in the first place. Right? Yes, you may be able to look for a short position off this, but for me personally, that what I'm doing is that, especially once again, if you get something like that, there's a big chance it's going to completely reverse against you. As you can see through here, look at this here. We go in from strong to weak and then back down again, right? Look at this here. What did we have? We had this move up from there to there, but then notice this leg through here, right? It wasn't the exact same, but notice how, now when I'm talking about the actual legs itself, right? Look at this here. Look at this. What we had. Look at strong up, strong up, strong up. What is this here? Right? What is this here? That's not a strong leg up, is it? Why did this thing go down here? Because it's coming off the back of a weak leg. Now, one of the best ways to see this, guys, is if you're zoomed right in for a couple. If I zoom in, say for 6 months or so, 6 months here, and I zoom back out. It's it's very hard to actually see this here. It's like see what I'm talking about here. So what I like to do is I like to squeeze my charts right up, right? And then I just like to have them more squeezed up like this, for probably depending on the screen you're using as well. But I like to use like the data like this here. Let me bring up some more examples here just to show you here of what I'm talking about here. So JP Morgan. I remember JP Morgan. There was actually one that happened. I'm pretty sure it was last year. There was actually a few of them that actually happened, but here, this is the one that I'm definitely seeing. And again, guys, you start to notice this here, right? So again, for short-term trading opportunities, guys, if you're looking for a short-term trading opportunity, this is a time not to enter in the markets because the market is slowing down. And as you can see, look at this back here. If I bring this back here again, look at this here, and this is just the pattern, right? What is first we come up strong, then it has a bit of a pullback, but then look what happens. That's more like a C, right? Because remember, this is A, B, and C. The A, the B, and the C. When you start to get the A and then the C, A and then the C, guess what you end up getting? You end up getting the drop. You end up getting the drop through there. Makes sense? So, and I think there's also, again, I'm just thinking about like other different markets out there. Like even looking at like Goldman Sachs, right? Like again, I'm trying to show you this here, guys, because you start to see these patterns form. And when you start to see this, guys, in the markets, then this is going to help you saying, listen, I'm not going to get involved with this because for me personally, guys, whenever I'm trading the markets, I'm always trying to find opportunities that's not going to have big moves, right? And if the market is slowing down, like there's momentum in the market is slowing down, like here, look at this here, right? We had an overall strong leg to the upside, but look what was happening, right? We actually went from strong. Notice how we actually started more like going like this here, right? The market started going like this here. A, B, C. This is more like a C, and coming off the back of a lot of A's through there. And why did this come down? There was a lot of warning sign to say that this was likely to come down. And the last one I want to share with you is what happened with the Dow Jones as of doing this recording recently, right? So as I'm doing the recording recently for the Dow Jones, I saw this drop coming recently because guess what? We had this very big up leg. See that through there? And then we end up getting the drop down, and now we're just going through a bunch of volatility. This is not about what about the Dow Jones are doing right now, but it's more about whenever you start to go from A to a C pattern, to a C strength, it actually starts to slow down from there. So there we go, traders. Hope this helps you out. This is just one pattern to show you that, or an example. Remember I said before, guys? Actually, I just noticed this here. Remember I said before, when the market goes up, and then you get this sort of C pattern, and then you get, remember I said before, and then you get something like this going on, like a big breakout bar like that. That's actually very, very, very risky, because remember, this is an A pattern. This is A through here, and this is a C pattern. Remember I said before, if you get that, you're probably going to get what? You're probably going to get something like this in a complete reversal, because you're coming off a week. Look at this here, guys. Strong, and then it started going into the weak pattern. See that breakout there? Look at that big breakout. Like, they had a breakout, didn't it? See the breakout? And look what happened. It actually completely reversed. So if you're looking to go long up here and then it reversed, you would have no idea why. But remember, if you squeeze back out, and at the time of this happening, this is what it would actually look like, right? And you would notice, oh, hang on a minute, something's not right here. We've done that, and now we're doing this. So we went from strong to weak, and then guess what? And then you'll be waiting for what? You'll be expecting to see the market to actually start to come down from there. So use this pattern, guys. This works on all markets, but this is just an internal strength of where the market is. And if you see there's actually a lot of strong buyers there, but then after a period of a few weeks, the buyers are still in control as they're starting to push the market higher, but it's a lot more weaker. Then there's a good chance that that's actually setting up, they're at least having a little bit of a short-term drop, maybe even a big drop, but it's a time not to look for a short-term opportunity or a trading opportunity from there. So anyway, traders, hope this helps you out. If you'd actually like to learn my trading strategy, guys, then I think that first link in the description there, guys, you click on that, you join my webinar, you can actually watch the webinar replay, basically on my actual trading system. You can learn that. Or if you'd actually like to work with me personally and join my inner circle, where you can actually be with me every day and I can coach you every day and be with you and share and coach you, then that second link in the description there, guys, you can fill out the application form and I will personally call you to see if you're a good fit for what we're looking for. See you, traders.